We've seen a huge rally in oil since February. So the question is the bear market in oil over with? On the stage analysis screener, there's now a large number of oil and gas stocks in stage one. And actually, if you add up the percentage of stocks in stage one and stage two, in a lot of these sectors, they exceed the percentage of stocks in stage four. For example, in major integrated oil and gas, we've got about 60% of stocks in stage one and two, and only 40% in stage four. Now, for a new bull market, you want to see the majority of stocks in stage two. So we can still see that there's a lower percentage of stocks in stage two. So this is early kind of stage one basing um, territory for the oil and gas stocks. But they have improved quite a bit from where they were earlier in the year and last year. And you can see that the silver and gold mining stocks are leading the stock market right now, and you can see that there's a large percentage of those stocks in stage two. So what's happened since February is that we've seen oil move from the high 20s all the way to 40, almost 45. And I like to use that 50-week MA to kind of filter out false breakouts, and you can see that we're starting to almost test that moving average here. We're not outperforming the 50 or the S&P 500 yet, but we're seeing a lot of high volume come into crude oil, which is good. Now, even though we're testing this longer term moving average, look at the chart of gold and you can see that gold had a number of fake breakout attempts in 2014 and in 2015 that ultimately led to continued bear market for gold. So just because oil is retesting that 50-week moving average doesn't mean that it's in a new bull market now. You can see a bear market complete these fake out attempts, multiple times before the bear market is finally over. And now that gold's breaking out, you can see how it's holding above the moving averages now instead of falling back below them once it retests the MAs. And it's also outperforming the S&P 500 now. So oil still has a ways to go. We need to see it move above the MA and then hold above it if it's going to be back in a new bull market. Now, some of the things that have been going on in the oil sector is banks are starting to cut credit lines to these energy companies, but they aren't being severe with the cuts. So they're trying to allow these companies to survive over the next year or two with what they have now, and they're starting to book losses on their energy loans, or set aside money to cover losses. So you can see in this article that Wells Fargo and JP Morgan are starting to set aside more money to cover potential losses in the oil and gas sector. And one of the big news items of this week was that Chesapeake Energy secured their $4 billion extension to their loan, but they basically pledged all their assets to cover that loan. So Chesapeake Energy really has to about 2017 to turn around their business and become more profitable, or they're going to be in trouble with their debt. And they'll probably have to sell assets in between, I'm sure, to raise more cash. Now, one thing I'll agree to with the price of oil is that most of the bear market in oil is probably over with. The big move in the bear market occurred in 2014 when nobody really thought it could happen, and we saw oil crash about $60 and hit this key 45 level, which it's seemingly turning into a support and resistance level. We saw the same thing happen in the price of gold, where most of the bear market in gold occurred in 2013, where it lost about $600, and the rest of the bear market, you had to sell the rips in gold to really make any money on the short side because gold really didn't lose much more ground after 2013. And you saw a lot of people on TV and on the internet saying how they love to be short gold, but really it was hard to make money on the short side in gold during those last 2 years of the bear market because most of the bear market had already been completed. So this is why how markets are hard to trade on the short side, and because the bear markets typically are over with before you can even blink an eye for the most part. So like I said, if you didn't sell these rips, it was very hard to make money on the short side in gold. And the same thing I think is going to happen now with crude oil, where if you don't sell these rallies, you're not going to have a chance at all to make money on the short side of oil because most of the bear market has completed. Um, Turning to some of these energy stocks, what's really getting people excited right now is, I mean, look at Chesapeake Energy, for instance. It's up 60% this week, and you're seeing a lot of huge volume come into the stock. Now, once again, even though it's rallying above the MAs, it's still not in a stage 2 bull market yet. It has to get above the MAs and they have to turn higher, um, like we're seeing in the price of gold. So this is still stage 1 or maybe early stage 2, but still unproven that it's in a new bull market. And like I said, with Chesapeake, you could see these energy stocks rally for a while this year, but ultimately, if the price of oil stays low in a stage 1 base, which I think is the most likely scenario, these companies are still going to be in trouble later in the year and into next year, until they can find a way to make some profits so they can pay back their debt. So I think the most likely scenario, in my opinion, is that these stocks rally and then fall back down once the price of oil starts to form this base, and once these companies, the bigger debt loads they have, the more in trouble they're going to be. So here's a couple of more energy stocks. You can see Canadian Natural Resources has actually moved above the MAs, and they're actually turning higher now. So this looks like a pretty solid stock, actually. And you can see high volume too. The one problem here would be is that the rest of the energy sector hasn't um, gotten quite to this position yet. So this is definitely an early leader in the energy sector. Here's another stock, Marathon Oil. You can see huge volume, which is pretty bullish coming off of this bottom, but still hasn't gotten above the MAs yet, and they need to turn higher. So the bottom line is that it really just depends on the price of oil. If oil does break into a new bull market here, then these energy stocks are going to go right with them. But I think the more likely scenario is a continued stage 1 base, and like I said, the only time you could actually make money on the short side would be to sell the rips, which will be tricky if it's in a stage 1 base as well. And you'll have to watch out. The problem with these energy stocks is that they have monster debt loads, and if they can't figure out a way to turn those around, they're going to continue to go bankrupt into next year, and new companies are going to form out of these bankrupt companies that will become the new energy stocks to invest in as energy moves back into a bull market. So we're definitely in a more bullish position for oil now, but we have to be mindful that these rallies could turn out to be fake rallies, until the final end to the stage 1 and the new bull market forms.